Is everybody good to go? Everybody was waiting on me. Thank you. I do apologize.
Yeah, go ahead.
Guys, thank you so much for joining us on this lovely Wednesday for our commonly scheduled bi-weekly AMA that we, for a good reason, moved over to today. Thank you guys again for joining up. Today is a special, long-waited for AMA. There's going to be some data that everybody's been looking forward to. It's important to keep in mind that the data and the scenarios that are provided to you today, or the particular scenario that's going to be provided to you today, will change as we come closer to launch. So without further ado, I'm going to introduce the team to you guys. So we have myself. My name is Gary. I'm the CEO of Steam Exchange. We have Neville, which is the president of Steam Exchange. Excuse me. We have Chris, which is the vice president of Steam Exchange, and we have Vera, which is our PR superstar. Not going to hold anyone back, guys. Go ahead, take it away.
Right on. So I'll start off with some of our guiding principles. So if Chris, you can switch over to the next slide. Thank you, sir. So you see here, there's 6 points as far as our guiding principles go. We'll just talk a little bit about each one at a high level, and we'll get into more details about some of them with the rest of the slide deck. So for scalability, a lot of people ask, what do you mean by scalability? What do you mean by strategic scalability? So what we mean by that is that we've developed our blockchain, and we keep saying open-ended. And what do we mean by open-ended? So if you look at other blockchains, so to speak, to implement a change, they're essentially doing a hard fork of their blockchain, including the change and then redeploying. In our ecosystem, that's not necessary. If we implement a change, a fork's not needed, and we're able to implement it through all of our relay nodes using our master nodes. Our entire infrastructure can be upgraded without forking net new infrastructure. So we're able to continue to develop, continue to scale, and continue to introduce optimizations into our ecosystem. Cost optimizations regarding our fees and our gas. This one's pretty straightforward. We'll continue to fine-tune our ecosystem and to ensure that we have the most competitive trading fees and gas prices. Community incentivization. So this is kind of where it ties into mining. We definitely encourage everyone to turn a miner on and mine blocks on the real network. Mining on the network allows you to learn how the network and infrastructure functions. It also means you took part in contributing to the stability and security of our infrastructure. There's definitely incentivization for mining, especially within the first year, and Gary will go through that later on in the slide deck. But we definitely want to make it easy to mine. So if you've never mined before, this might be your first opportunity to take a stab at it. For longevity, our block rewards, they're determined with longevity in mind. We'll begin by implementing aggressive rates, introducing a fairly large amount of new tokens into the ecosystem, and slowly scale that down as our economy grows by implementing changes such as halving rewards. So, in the first year, you'll see later on in the slide deck, the inflation rate for the first term is fairly significant, and that's going to be explained and how it's going to be offset. But we can tone that down and scale that down over time and bring the supply down by our scheduled burn schedules, burning tokens that are miscellaneously assigned, for example, by nodes generating rewards, and halving. For security, or security elements, being a private blockchain, we're able to mitigate most of the common malicious trends happening on other chains today. We're able to accomplish this through a rigorous vetting process and only allowed approved wallets to deploy smart contracts into our ecosystem. So if you're a smart contract developer, you're a project owner, and you want to port your project over to the Rails network, you wouldn't just be able to deploy it like you would on BSC or Ethereum. You would have to be approved, vetted, and then we would whitelist your wallet to be able to deploy into our ecosystem. Overall welfare of the ecosystem. Steam Exchange, we definitely aim to accomplish 3 goals. The first one is to satisfy existing investors. The second one is to reward the validators and miners. And the third one is to sustain our economy. So we can definitely accomplish this by balancing our token economy and offsetting inflation with scheduled burns and, of course, miscellaneous burns throughout our ecosystem wherever possible. Again, we'll get into more detail about some of these guiding principles in subsequent slides. So with that, I will pass it off to Chris for the next slide.
Thank you, my good man, and good day, Steam team. As always, appreciate you guys having you guys on with us, and we do again apologize for the delayed start today. So as already mentioned, my name is Chris Beckford. I always like to go over this again because for those who don't know me, and maybe this is your first time joining, I am the acting vice president and head of infrastructure here at Steam Exchange. So as mentioned by Gary earlier, what I'm going to be doing is stepping through the some of our network attributes and statistics as it stands today. It is important to mind that it's important to note that the information as displayed today is subject to change, obviously based on the future network state, right? So I'll be just zooming in a little bit here on some of the key network attributes, which Neville already touched base on some, but I'll double dip a little bit as it pertains to the real network. Now, this information along the way we've shared, however, this is indeed the first time we've kind of positioned it like this in a visual aspect. And with that being said, what you're seeing on the following diagram, these are basically the key areas of focus, but not limited to, right? There's definitely other key areas that we zoom in on, but these are the top ones that we've noted and kind of how we've weighed them. And it's not to say that the weights can't change, right? So we have security, decentralization, scalability, accessibility, developer interests, always, mining and node rewards, the integration, cost efficiency, and speed. All right, so just zooming in here on security, definitely if we could depict it way beyond the scale, we definitely would, right? Everything that we develop today within our ecosystem is done with security in mind. Now, while it is true that from a blockchain technology perspective that blockchains they always bolster that tamper-proof ledger of transactions, it's no surprise that networks are not immune to cyber attacks or fraud. Most common ones out there are phishing attacks, routing attacks, and even Sybil attacks, right? Now, when keeping security in mind, it's always key for us to consider all layers within the technology stack, right? We're not just looking at it from a one dimension, we're looking at it from the broad range, right? This helps us to ensure that we have the appropriate cadences in place to manage and govern the permissions for the network. Just some of the key focus areas, identity, access, and key management, those are huge ones. Data privacy, secure communication lines, and also smart contract security, just to name a few in our current existing governance model. So I'm going to move around this map a little bit here. I'm not going to go too deep into all these here because we do have to have some meat to get into on the last slide. But decentralization is another big one, right? Now, if you look at it, from a decentralization perspective, control and decision making will always be, or very much be, by way of the distributed network. That being said, by us decentralizing the management and access of our resources, we're aiming to obviously have that greater and make it more fair in terms of the service which can be achieved, right? Now, decentralization typically comes with trade-offs, which along the way, in the grand scheme of things, the trade-offs are worth it if you look at it, right? Because that helps us to bolster the stability across all service levels and kind of have that longevity in the blockchain, right? So something to think about there. Scalability, again, this was already touched on by Neville, and he did a great job of explaining it. But again, our approach to that open-ended development, that's what's kind of helping keep us in that optimal position to scale our network and services, when that time does come. And the good part about it is the way that we're building it out is that, we're not going to be hard down. There'll be very few instances where we're ever hard down, but it'll be a very smooth and seamless transition over to when we do particular upgrades. Accessibility, pretty straightforward. It's about, being able to access those said services across various methods. And that's something that we're continuing to think about in terms of how can we evolve, how can we bring business to the Rails network and make it easier for everyone to do business on the network today. Developer interest is another big one. Obviously, we encourage developers. We will be encouraging more developers to come in and do work on our platform, and obviously spread the good word, right? And you know, our hopes is that the way we're building it, it's easy, and it's very it's straightforward from a development perspective. Mining and node rewards, I will not touch that because Gary is going to be, you know, doing a little bit of deep dive onto that one, but I'll leave that there. Integration, it goes without saying, right? Seamless integration of our, not only our products, but external services as well for the future, right? You know, we have to make sure that that integration there is as seamless as possible. Just, you know, so we don't have anybody hopping through, you know, a bunch of, you know, loopholes to kind of get access into the network, right? So integration, smooth integration at that is something that we've kept in the foreground in terms of the way we've developed and built out the infrastructure. Cost efficiency, obviously another big one for us. You know, we want you guys to do business with us, right? And you know, as the network scales up and it gets a little bit busier, we're always going to keep cost efficiency in mind in terms of what mechanisms we have in place to ensure that the cost efficiency stays as competitive as possible, and keeping things fair across the board. Speed, we can't stress this enough, right? Obviously, we've all had our fair share of examples where we experience network latency and stuff like that. So definitely from a, you know, when we're looking at a true distributed architecture, you know, as common as this is, you know, this is definitely one of the most important factors in terms of the overall performance of the network, right? And, you know, when transactions are being validated, you know, and we all know that it has to be broadcasted to multiple nodes, we're looking to obviously optimize the response and you know, just based on the way we've developed our consensus mechanisms. So, you know, that being said, you know, I'm not going to go into too much detail, but, you know, one of the things that we've always said in terms of, you know, having our network infrastructure is that dedicated bandwidth, right? Very few places out there are bringing that kind of capacity, and that's something that we hold true. Myself, especially because I am a network person through and through, so I'm big on the whole network bandwidth aspect of it, right? So that's something that, you know, that we're looking to obviously, you know, help to ensure that speed on the blockchain is huge in terms of, you know, being fast, competitive, and also to just making the overall quality of life better. Lastly, on the right-hand side, and as I said, the information which is displayed is subject to change based on the future network state. But you know, based on some last numbers we've been crunching, this is kind of where we're at today, right? So we're not displaying transaction per second. You can kind of do the math if you reverse it into the average block time. But we're about around the 350,000 transactions per block right now. Network latency around 40 seconds, and when I say latency, what that means is that, yeah, while you may initiate that transaction, you submit that transaction, it would likely validate and complete on the blockchain. However, it might be, you know, 30 seconds, 40 seconds till that actual person, you know, might see those funds in their wallet, such, right? So just a high level example in terms of the transaction latency there. Average block time right now is still around that 3 to 5 second mark, which is really good. And our current testnet block height is around the 221,000 mark. So again, that's just a little bit of crunch, fun facts in terms of our statistics and how we're tracking, and again, some of the key network attributes. All right, so I think what everyone has been waiting for, what I'll be doing here, I'll be passing the mic over to Gary, and he will take us through our initial supply. Gary, over to you.
Thank you guys. Thank you, Chris. Once again, I do want to apologize for the late start, but let's keep going. This is the, you know, quote unquote juicy stuff. This is what you guys have been waiting on, and I'm going to reiterate what I've said in the beginning. All the numbers will change. So I'm not going to say they're subject to change. They will change. They are calculated based on a particular point in time. So for instance, the hiccup that we had on the weekend where we've noticed an issue with the calculation that we wanted to address and make sure that we go over it and that it's 100% reflective of that point in time. Therefore, it would be greatly easier for us to come back to this, let's just say, for instance, on the fly, and if we wanted to, every weekend we could adjust it with the new number. So that was very important for us. Right. So let's get going. The starting supply, as you guys can see, is 165 million coins. So it's greatly reduced from where we are now. So this is something we've been talking about. I'm gonna go maybe a little bit more into detail about this. What you guys are seeing on the screen is point form, but I will, as Chris and Neville mentioned, elaborate more on it. We could potentially circle back to it in the question period, and we could elaborate more. So if you guys could hold off on the questions you guys are throwing in the chat until we get to that question period, and then we promise we'll try to accommodate everyone, right? So just hear us out, and we'll explain how it works. There's a formula. There's science to the madness. As a matter of fact, before I begin, Neville has put together a separate web page where you guys would be able to come in and test it out for yourself. But we want to fine tune it with the tiniest of details, so it doesn't leave anything up to the imagination. Therefore, it will be live at some point over the next 2 weeks, maybe around that time, right? So, supply, we went over that. I'm just going to go ahead and explain it with pairing it with the trading price, okay? So the trading price and everything that you're seeing on the slide is strictly for the moment of migration, okay? So at the moment of migration, we need to calculate all these values so that we can input all of these numbers into the blockchain. It's the configuration of the blockchain, right? Inflation, term one. Why did we go with term one instead of setting a particular time? Because as everything that we do, we want to protect everybody and the ecosystem. And we care about you guys, the investors, right? The OGs, so to speak. Because there's going to be new people that are going to come, but you guys are the backbone, if you will, right? So term one, we're gonna go with an example here, and again, this is preliminary. Term one, essentially, right now, the way it's calculated is 1 year. So within 1 year, the production of coins that are going to be minted does equal to 100% of the supply that we currently have. Well, that we will be starting with. It's all very carefully and meticulously calculated, and I will circle back to that. Now, one thing that's fair to point out, the way we're looking at this, guys, it's very important to understand what we're saying here. We're not saying that we're better than anything out there that's in existence. We're saying we're different. So we're not saying that somebody else has a blockchain with negatives, and this is their negatives. We're completely not saying it, okay? Take into account the two major ways of running a blockchain, proof of work and proof of stake. It's not necessarily that there's something bad about them. It's that this is common practice. And what we're doing, our vision, is built with that common practice in mind, with both of these two ends of the spectrum completely meshed together on some aspects. So we know there's people that want to mine. Their computer skills allow them to build a miner, they excel at it, and they enjoy it. And they do not enjoy running a node. They want to mine. So by having the proof of work aspect, we're satisfying that part of the community, right? We are also aware that there's a lot of people that kept asking us about staking, right? So proof of stake commonly is where you have nodes and you stake coins, right? In our case,
we're opening this up to anyone that ever wanted to participate in it, whether you know how to or you don't know how to. It doesn't matter. We'll help you cross that bridge. We'll have demos, we'll have explanations, there will be tutorials. Everything will be there. All you need to have is the will. As long as you have the will, we will help you do it. Now, what's the beautiful part about here? And this is very much like mixed all together. So we can't really go into one topic without touching the other one. It's all in conjunction. So what's the beautiful part about here? So the beautiful part about here that our vision is to reward the miners and the nodes. The whole category for miners, take that into consideration, right? And then take into consideration the nodes and the master nodes. That's one category. Let's just call it nodes. With the example of 50-50. So if per each block that gets generated, we reward the entire section of the miners 50 coins and the entire section of the nodes 50 coins. Now do bear in mind that it does break down further, right? It's not one entity ever that gets it. It's split into hundreds if not thousands of entities, right? So if you have a pool with 1,000 miners on it, it's split between those 1,000 people, right? And not necessarily split equally between those 1,000 people, but we'll get into that later. And if you have a node running, it depends if you're running a master node or if you're running a relay node, right? Now, with that being said, bear in mind we are currently looking in the direction of one thing we're gonna do for you guys, and this is not 100% set in stone, but this is something we're very much so leaning towards. is at the very least, if you don't qualify, and later on we'll have a different AMA about this, if you don't qualify for running a master node, because it does require a little bit more technical skill uh, than running a node, right? Then at the very least we're looking at potentially guaranteeing that every single person that has been there, so every one of you guys as the OGs, guaranteeing you guys a spot in running a relay node. Now, the main difference here is it is commonly done in such a way that if you missed it within the first week, you probably are looking at going and borrowing money in order to buy what have you company's token, right? And staking it on a node. And if you run it wrong, you actually end up losing a substantial amount of money. We've talked about this before. I'm just going to go over it again in case somebody missed it or someone new is here. When you run one of our master nodes or relay nodes, we're not asking you to stake anything. As a matter of fact, we don't want you to stake anything, and we made it not possible for you to stake anything. So all we're asking you is to run a master node or a node if you want to, and we'll help you facilitate that. Why is this important for us? Well, it helps us stabilize the ecosystem. It helps us stabilize the blockchain. The more people we have it running, the better it is. In security, in performance, and in many other things like such, right? Now, we've also always said, you know, we're for the community. We look at the greater picture. We look at what's going to benefit everyone more. And we strongly do believe that our vision here, where we don't take anyone's money or you don't have to stake your coins in order to run a master node or a relay node, will allow that much more people to come and participate and run a node, thereby, like I keep saying, upkeeping the ecosystem, right? Now, should you want to run a miner, no problem. You're going to join a pool if you'd like. Go for it. We'll help you guys facilitate that as well. And for the pool operators, obviously, we'll help them get going as well. Now, a key point here is by separating the reward into two different reward systems, we now have the capacity to look at scenarios and implement preventative measures. So it's commonly done out there, as other blockchains do it commonly. They have preset times or a fifthening, like was just talked about prior to this slide, right? But what we're saying, and this is the reason we wrote not year, we're saying is the way we're looking at this currently, and again, we could reassess this, right? Every half a year, at minimum, every dive into the ecosystem and really take a look and see what's going on, more than assessment, right? Break it down and redo all the numbers and make sure we're on track. Now, every half a year, if we see a potential for a problem, we could always come out and say, guys, we're scheduled to have as a reward in the 2-year mark, but we want to implement a preventative measure and avoid a misbalance. We keep it, just I want to make a point here that we don't see it happening. If it does, it's extremely rare. The odds of it are practically non-existent. But just in case, I am a little bit of an overthinker, and I want to be prepared for bad rainy day. So the team here at Steam Exchange, they've kind of grown accustomed to it. It may seem redundant to some of you guys, but they have accepted that this is one of the ways I operate, right? So we've all agreed on that we would rather have a preventative measure available as a tool rather than waiting for something to happen and then seeing how we can fix it after, right? So that's why it says term and not year one. And again, we would be looking at things. If we need to change them, we would give you guys sufficient time. Most recently, if you look at a different network that we won't be mentioning, there was a lot of people that got really upset because they feel that they were blindsided by the change, which was rather implemented very quickly, I should say. And the problem with that is, investors, when they want to invest in something, especially when they're staking something, right, which is again not the case here, but this is how it is commonly done, they do a plan for a few years, 2, 3, 4, 5 years, long term, medium term, or short term. But when they do invest, they invest based on the data at hand. Now, if the company goes all of a sudden and flips that data basically upside down on you, you have every right to be upset. And it would seem to me, the way I perceive it, is they knew and they didn't tell, but they knew. And what that caused is essentially everybody pulled in and joined in because, hey, it's a great system, we like how it works. And then they flipped it on its head, if you will, and now everyone's in there is kind of stuck because it doesn't make sense to move it somewhere else, and you just kind of leave your funds there, and that is what it is, right? But had you been given a choice prior, you may or may not have done a different decision, but the point is the choice would have been yours. We're all about the choice, right? So if you remember, guys, from the V1 situation, we've always given everyone the choice all the way. So everything we did, we've always given people the choice. And this is important to us. This is why we're saying, okay, if there is a need for something to be implemented and changed, at the very least, the community would have a half a year heads up, which is substantial, right? Now, I'm going to leave this for later because I can keep talking on and on and on about this for 1,000 hours straight. I'm just gonna get going back with this slide, right? So we strongly tested this formula, and we all agree that this starting supply does satisfy existing investors. And we touched base on that a little bit more, and I'm sure there's going to be a lot of more questions, and we'll take them, and then for the other ones that we won't be able to, we'll take them in and we'll answer them on the chat, no problem. And again, these numbers will be recalculated as we move along, right? Now, also the amount that's generated is appealing to new investors. It's appealing to people who want to mine, and it's appealing to people who want to just run a node, because not everybody wants to have the equipment at home. It's loud, it gets hot. It also is quite expensive at times, depending on how bad you get into it, right? Why we're saying this? Now, I think it's fair to note something here. I think, yeah, you know what, guys, I'm gonna jump ahead into this. I'm gonna just explain this a little bit. I know this might seem confusing, so I want you guys to listen very carefully, because this is very, very important. And I know I might sound boring, but hear me out on this one, please, guys. Listen carefully. Even though it says there that we're generating 100% in the first year, okay, it does not affect the price of the coin. So once again, I'm going to go over this one more time very carefully. Even though we're generating 100% of the coin in the first term, it does not impact the price of the coin. Now, some of you might be confused by this and asking, how is this possible? Without going into a rabbit hole in a sense of a discussion on this, which I would gladly go down that path with you guys, but it's well beyond the scope of how much time we have here. I'm just going to give a simple explanation. The current token that everybody has now on the BSC scan, on the Binance Smart Chain, uses an AMM, an automated market maker, known as PancakeSwap. Okay, with PancakeSwap, it's very black and white. It's very clear. More coins equals less price. Less coins equals higher price, right? Now, when you have a coin and not a token, you put it on a centralized exchange. Okay, can you trade it with another AMM as a pair? Absolutely. That's the whole idea there with the blockchain, right? But the price of the coin, notice I'm not saying token, I'm saying coin. That's post-migration. The price of the coin is then set by what the community and the users on the centralized exchange are willing to pay for it. There is no more AMM. So I'm willing to go and elaborate more on this in a question period, guys. But the 1,000-foot high-level ceiling on this is AMMs. They decide the price for you. Centralized exchange, it gives you guys the power to decide what you are willing to pay for that coin as a buyer and what the seller is willing to sell it at as a seller. Now, I think I do want to go over how we got to those numbers, but I think we'll go at it as it comes along. I don't want to take up too much time here. Yeah, let's circle back to this in the question period.
Yep.
Yeah,
I think
let's
that's fair.
conduct it in the question period. I think that would be best, and we could also explain the time it takes. We touched based on it on our last AMA, just ever so slightly, but how it works with the time wise, right? Because the starting supply, it essentially uses a few values that everybody can take and kind of calculate it for themselves. You know, today's coin price, right? And obviously that changes today's supply. And, you know, we had to calculate at which point it becomes not worth it for somebody to participate in the ecosystem, right? And then we had to calculate what's the point where, okay, we say this is too much reward, and then we had to take into account the next 8 to 10 years of halfening, fifthening, or what have you, right? But we also didn't want to set in stone that saying, you know, every 2 years it will half, right? Because it leaves a lot of room for error. Normally, how it's commonly done is people start straight from a coin, and they don't migrate from a token. We are in a very unique position that's different to anything out there in existence, which also benefits our community quite a bit, right? So it's fair to note that we've put countless hours into this, and this is where we landed on a number where we can say this is very much so still preliminary, but this satisfies the equation because it's not something that, hey, we like these numbers and this makes, you know, this looks good. No, it's a mathematical problem that has a mathematical solution. This isn't something that somebody just liked and the numbers look cool. It's all mathematical. It either works or it doesn't. So we'll touch base on that later. I can imagine there's a lot of questions there. But in the meantime, let's pass it over to our head of PR, Enki.
Thanks, Gary. Much appreciated. And just a quick call out here as well, guys. The 100% that you see, that is the cap, right? That is the highest it can be in term one. As a fact, it can be lower than that as well. But just moving quickly, let's dive into some marketing updates, and then we can circle back towards our question and answer session as well. So starting from the top, guys, if you have been following our previous AMAs, again, we've shared a ton of content out there, right? So track back to our NFT gateway, the Launchpad demo, the mining pool demo, our blockchain documentation, and then subsequently this AMA that focuses on the initial supply, right? So there's so much content out there. Now it's essentially our job to translate that or to showcase that in an easily digestible manner, right? So that's what we're working on. We're working on creating maybe infographics, slide tiles for our socials, stuff like that, that will help disseminate this info in an easy manner, and also help with the P2P, like you can share it with your friend. It helps on socials as well as shilling also. So we're essentially working on building out an additional media base there. So definitely work going in there. We have identified socials, our social platforms, as being an area of opportunity, and we'll be focusing our attention here as well. So keep your eyes peeled. We're hopeful that when there are community action slash involvement required, that you guys will help. And just a quick little shout out to our Shill Army. We have been slowly picking up momentum in this group, so definitely a shout out there. For those of you that would like to join our group and take part in that sort of shilling or that organic sharing of the project, please DM an admin, and we'd be happy to let you in. An exciting update here, guys. Please listen in. On May 2nd, which is a Monday, our team will be having an AMA. It will be a live AMA with Rule Black, and this will be hosted on Benzinga. I'm sure that is a familiar name to all of you guys, but we will have a dedicated Steam Exchange AMA on Benzinga on their YouTube channel, and that will be on May 2nd. This is an incredibly credible sort of platform to help get our messaging and our brand out there. So special thanks to Rule Black as well for setting that up. we do look forward to your engagement there, and also to seeing Rule be a part of this community and engaging with us as well. So just the fourth point I'd like to touch upon, again, speaking to AMAs and YouTube and other influencers. I'm sure you guys are familiar. We did a huge push a few months ago, and we've taken all that data. We've identified a few credible influencers that worked well for us. The community they well received our messaging, and we will be revisiting those individuals again in an AMA format, because that's what we feel like would be best to showcase the the plethora of information that we've shared in the last few months. Also, on large Telegram communities, we will be hosting AMAs there as well. So just stay tuned for that. We are in talks with a few mainstream sort of media opportunities. We are currently discussing these. Nothing concrete that we can share at this stage, but definitely once the ink is dry or there are more details finalized, you will hear it first from us. So just on a closing note, I do want to say that, guys, trust the process. Right from the get-go, we've been absolutely transparent, and that's something that we will continue to do. Again, we are treating this as a marathon and not a sprint. We're being strategic in our release of information and execution on certain initiatives as well. So again, I just want to reemphasize, trust the process. And on that note, I'm just going to bounce it across to Neville for an exciting little strategic partnership update.
Thank you, Enki. So we've been talking about our gamified learning for a while, and then we started talking about some of the partnerships involved with that. So we are happy to announce just today we sealed the deal, and we will be beginning with that one of those faculties on Monday, May 2nd. So for those of you who may not know, Sheridan College is the faculty we have chosen to work with. So Sheridan College is a niche school for game design. So the school will be providing students to us to work on level design, map design, character design, integration, and whatnot. We do have a proof of concept that was provided by one of the students at Sheridan College on what their thoughts and feels would be for how the game should look and function. So we're extremely excited for that. The University of Waterloo will also be joining the team. They will be focusing on the AI elements of the game. So we talked a little bit about this in the past, but I do want to go into a little more detail about how it will work. Say, for example, you are a new investor in the crypto ecosphere. You've never invested before. You would enter this game. You would walk around and you would speak to trainers. Those trainers will ask you some questions, basic questions about digital assets, and start gauging your knowledge of cryptocurrency. The AI will then kick in, and it will decide what your next subset of questions are going to be. So if you've answered the question with confidence, you got the answer right, your next question will be a different topic. Whereas if your answer was, it was not right, but it was, halfway there, same thing. Your next lesson or learning opportunity will be catered around what you don't understand and what you do. So it's a very customized experience. It's not a cookie cutter experience. No two persons' journey will be the same. So we're extremely excited to work with both faculties. Both faculties come with huge reputations and definitely are great at what they do. So definitely more information to come on that. And once we get more plugged in to this game, we'll try to put together a little proof of concept that we can deploy to the public and for you guys to just walk around and interact with. So that's it for me. And I think with that, we can move into questions.
Right on, thank you. Just as a side note, I think the NPCs there in the game must come with your beard. Everybody's been wanting one, so I think we gotta incorporate it there. It's quite a symbol.
We should just change our logo, I guess, right?
I mean, yeah, but yeah, I'm okay with that. Yeah, I mean, we should do a proof of concept. We should dye it first.
Right on. Cool. Let's see.
Let's go over to question period. Can we change the slide there? Oh, never mind. It's changed. Sorry, my bad there. Okay, so hands up, everyone, please, who would like to ask us anything about today's AMA. Today's AMA. And if we run out of those people, then we'll circle back to anything else, guys. But if you don't mind, please, today's AMA, would like to go over the information that was presented here today first. Sir Digga, go ahead, sir. Sir Digga.
Okay, there we go. Sorry, I forget about that. You can hear me now, yeah?
Yeah.
Cool. So, you briefly mentioned about the games section about it, and that's my sector that I work in for 15 years. So, the quick thing I wanted to know was what do you mention anything about the engine that you're going to be using to be making the game? Because it sounds like you're making some kind of a metaverse that you can walk around in. But what engines and tool sets that you are?
Neville, did you want to drop a screenshot or no?
Sure, do that right now.
I believe. What was it? He said he built this one with Unity.
Unity, yeah.
Sounds right, yeah.
So the person that we've onboarded is um, well versed in Unity and Unreal 4.
Okay.
Obviously, now that Unreal 5 came out, it's a much needed improvement to Unreal 4. It's the same coding language, right? But
Yeah. No, I use it quite frequently because I design games a lot, and I'm a producer, active producer right now. But I work in
interesting.
the industry.
We'll definitely keep that in mind. It's good to know. That's it. That's
Oh, okay. I see the screenshots now. Okay, cool. Thanks.
okay. Yeah, guys, if you want to take a look at the main chat, Neville put out a few screenshots there. Oh, you didn't put out just a screenshot. You put out a little video there.
Yeah. So
Nice.
what you're seeing here is so essentially in the final stages of the interviews, we asked all the candidates to put together a proof of concept of what they had in mind with our base requirements, right? So we give them our base requirements, we gave them what the look and feel should be like, and this candidate brought to the table the best product in our eyes. So what you're seeing in that GIF, and I'll pin it temporarily so you guys can find it. It's not the game itself; it's what he imagines the game to be like. Of course, we're going to work with them and we're going to fine tune what our expectations are, and the look will change completely. Right? This was just a proof of concept to show what his capabilities are as a student, and based on what he heard and understood from our base requirements.
Beautiful, guys. Don't be shy. Ask anything that comes to mind about this. If you are by any means ever so slightly even confused about anything that we've said or mentioned, ask away. And it's okay. It's not a problem. Just go ahead and ask. So I'm seeing that there's a lot of questions around inflation. Okay, so M dot, let's let you ask a question and then we'll clarify inflation a little bit more. M
Sounds
dot,
good.
yeah, go ahead.
Yeah, I just wanted to follow up. I'm sorry if I missed it. Are we still looking at Q4 for transitioning to the native token?
So originally, we're still looking at Q2, but just the end of Q2, provided that everything goes smoothly. But we're from the GTA here, Ontario, Canada, and unfortunately not. I have yet to find a road that doesn't have a pothole or a speed bump.
I hear you. I mean, I'd rather under promise and over deliver. So I just wanted to check in.
Yes, but no at the same time, right? We from the get-go um, came into understanding that no matter what, it doesn't matter what the situation is, good, bad, or ugly. It's always best to be transparent, right? And then you always get these that are upset naturally because they believe that the world doesn't exactly rotate around the sun, but somehow it rotates differently. But and then there's the other ones that are upset, but they understand. And then there's another class of people that says it is what it is, and let's just move on with it, right? And those are the three major ones that we're seeing. It also has to do with the BSC space itself, right? It's a different crowd of people than the Ethereum space, for instance, right? Uh, but we really had this feeling that, let's go ahead and do it in the BSC space and be that exception to the rule that you could shine a light on this darkness that's commonly associated with the space, right?
No, I completely hear you. And it did. I mean, I was there at launch, so you know. And again, I get it. I get it. People want immediate gratification. I get that, and there's a sense of sometimes entitlement, and that you owe people certain things, and that's obviously not the case. You wouldn't do that with any other business. And I'm okay. I'm part of that grouping that is okay with however long it takes, because I understand what you guys are trying to do. So, kudos. I just wanted to check in about the date, but sounds like you guys got it covered.
Appreciate you, Mdot. Thank you so much. It was a very nice approach to your question. Thank you. Guys, it's been mentioned multiple times now, and we're getting DMs. If you guys want to ask something, go ahead, guys. I'm going to give you one more opportunity here before I jump into this. If anybody wants to raise their question up, ISO, if it's pertaining to the supply, I'm about to talk about that. If it's something else, go ahead, ISO.
So it's sort of relating to the supply. Well, now that we know the supply, is the block time and reward also going to be revealed, or at a future date?
So the example, I believe, Chris, you gave out the example, right? Do you want to go over that one more time?
Yeah, that's correct. Yeah, I can quickly kind of shift back to what we kind of threw up here from the current statistics in terms of the average block time. So that's as is. The reward portion of it, Gary, I'm not sure if you want to touch base on that now.
I mentioned it was 50-50.
Yeah. Okay. So yeah. Okay. Yeah, so this to answer your question, these are the stats which I did cover earlier in the AMA with regards to the current stats, and again, it is subject to change, obviously based on the future network state, right? But for right now, this has been pretty stable as we've been testing accordingly based on the current workload.
So the only time it would dramatically change is if the price dramatically changes. Other than that, it would change a little bit here, a little bit there. Again, ISO, it's a math equation. It's not like there's a number that we think is pretty and we like it, and that's why we're implementing that number. It's strictly a mathematical equation. Where does it begin to not make sense, or where does it begin to be too profitable to a point where it's dangerous, and then we would find ourselves implementing a mitigation plan that should really never ever happen, right? But nevertheless, just because we have that option, we wanna present you guys with that option that we do have it. Should we ever need to, we don't see we can't predict the future, but we'd rather be safe than sorry, right?
Yeah,
Commonly,
rewards shouldn't really
it's just
be.
doesn't work like that, right? Commonly, it doesn't. There's not, 99.99999%. There's never ever a need to actually initiate any one of those redundancy plans, but just in case, we have it, right?
Right. All right. Thank you.
No problem. And then your part for the supply, I didn't quite get the second part of it. Do you
Well,
wanna?
I didn't really mention supply. Like, I know the supply already, but the block reward, you said 50-50. You have like an exact number?
Well, you said your question pertained to the supply, which means block reward, right? So 50-50 coincidentally is the number.
Oh, it's actually 50-50? Like
That
5,050?
coincident. No, like 50-50, like 100 coins get generated per one block.
Okay.
Only 100 coins. Okay, it just coincidentally that's the number that works in the average way, like in the middle, in between the too much and the too little, right?
Mm-hmm.
Now we can still change that, and it doesn't actually get split up into 50-50. It's just, if you remember, I mentioned two different categories. So the categories of all the pools and the miners,
Yep.
and then the category on the other side of that bridge would be all the nodes. So master nodes, relay nodes, right? Those would also get 50 coins per mined block, per confirmed block, right? Now, they do split it differently amongst each other, but that category gets 50 and that category gets 50, right? It's very different how they get dispersed. But as a category as a whole, these get 50 and those get 50 as well.
Okay, thank you.
Now, currently the 50-50 does equal up to the 50-50%, but that's just because the numbers are the same, and they worked out in the math equation, right? It doesn't mean that moving forward, when we do any future calculations and recalibrations, that won't change. It likely will.
All right, and then I feel a lot of people are curious, like pertaining to inflation, if
Right, so I was gonna
the
touch
burn,
base on that now.
yeah, if burn and other mechanisms that you guys have in place will outpace the supply of new coins made through nodes and mining, or be
Sorry, is
equal
that a
to it.
question or
Like, people have been saying that in chat.
okay? So the burn and fees and everything that's most common will likely not outpace it, as in a blockchain in a whole. Okay, as together, right? It just doesn't. The only thing that would be a noticeable change, right? But it would still not affect it because we're not doing it at migration, right? But we do need to burn them. So the only thing that you would see that you're saying, okay, like theoretically, because there's less in circulation and the price has to go up, but again, it's set through the centralized exchange. This is what people are willing to pay, and this is what people are willing to sell it by. So when we do that massive burn on that burn wallet, I mean, it's good publicity, don't get me wrong, but it doesn't actually change the value of the coin. This is where it's very beneficial, because it's now not on an AMM. It's now centralized. It's now on a centralized exchange, which also means it can go on other centralized exchanges, right? So it will not affect the price, right? So you can actually increase supply by 2, 3, 4, 500% if you wanted to. Of course, that's crazy. We're not going to do that. But hypothetically speaking, if you were to increase supply by 500% per year, and that's only based on the initiating number, right? As you go along, that number greatly decreases. Now, it still does not affect the price of the coin. And this is where we did suspect that a lot of people are going to have a difficulty understanding it. And we will have a flow chart for you guys for the next AMA so that we could explain this and show this on a diagram, right? So you guys can see the difference. I will speak to it quickly once again, unless somebody wants to take a deep dive into it and ask me something particular. But I just don't want to take up everyone's time, right? So AMM, when you set up the liquidity, you put in a pair. You know what, Neville? Can you explain this part quickly, please? How the floor price gets set on AMM.
All right. So like the floor price on AMMs, they're created by a liquidity pool, right? So you have your tokens. Say you have SteamX, and then you have BNB. In our current situation, the floor price is set by the pair, right? And it's when you buy and when you sell, you're not buying from anybody. So the price of the market is created by the pool itself. Whereas on a centralized exchange, that's not the case. On a centralized exchange, the price is determined by supply and demand. So if someone is selling and someone is buying, the price of that trade is what sets the price. So one thing to consider is the rewards that are being mined. They're not going into circulating supply. Those tokens may never be in circulating supply, depending on the miner and depending on the pool. So the 100% we're talking about, it's a number that we're putting on the table to be transparent and honest, but it could be less, right? And of course, we're going to offset those numbers by scheduled burns. I mentioned other mechanisms that we haven't revealed yet because they're not ready to reveal. But when they are, right, it's going to all balance out to what we talked about, being a 1 to 3% healthy inflation rate over time. We just have to get there. So we're launching a net new blockchain with a net new ecosystem. There needs to be reward to make sure that the stability, the security, and the longevity of our blockchain and our ecosystem exists. If we don't reward the validators, they're not going to mine our blockchain. And if we don't have miners on our blockchain, that hinders our progress. So before we all jump to conclusions, I think it's worth taking a step back and just thinking about the longevity of the project. We all held this long, and of course we appreciate that. We're almost there, but like I always mention in the chat, the journey is just beginning, right? When we launch, that's the real beginning of our journey. And to get to the success of our competitors and our peers, we need to implement certain elements into our math and into our logic to get there. So just bear with us. All will be understood over time.
It's really simple, guys. It's a mathematical equation that has a solution, but the solution is not one set number. It's if you will, a low number and a high number, and the idea is theoretically, if you do the average between them, you hit the middle. That's the ideal number, which is not always the case because you know, like we keep saying, the longevity. Like you see other common ways of doing this where a blockchain would have a halvening every 4 years. For instance, is very common with the godfather of the blockchains, right? Bitcoin, right? It's got a halvening and a halvening and halvening, right? So all of a sudden when you hit a block and you get a block, your reward is reduced by half. What does that do? It drives the price up. Now, why does it drive the price up? Well, in particular with Bitcoin, because there's a set amount that gets produced, right? If you are really bothered by this because you can't envision this, guys, next AMA, we will provide you guys with a flow chart that will go into much more details about what is the difference between the AMM and between a centralized exchange hosting our coin. Also, why it doesn't really make a difference on the price, if you will, right? You can, we're very careful here not to mention names of any other projects because we, you know, technically are not allowed to compare ourselves to anyone else. But take into account the most wanted coin right now, if you're a miner, right? I'm pretty sure everybody, or at least most of you guys, know what I'm talking about. That coin essentially operates from the mining standpoint the exact, very similar way, I would say, um, to a point where they had to, like, they actually got out of control to a point where they've had to implement a procedure, as Neville mentioned before, a hard fork, right? Upgrade or update, whatever you want to call it, in order to mitigate transaction fees, because these transaction fees were going to the miners, and it ended up being a racing game of who has more, and basically, if you were wealthier, then you can afford to make that move faster, which also did benefit all the wealthy ones over there when they were trading, right? So the way we're doing things for the community is it's much more stable, it's much more relaxed. It may be hard to envision this, but going back to what Enki said, we didn't just come up with this last night. We've been doing the math and the numbers and the discussions and the blackboard and the whiteboard and wiping it off and doing it again, and multiple discussions, many hours, many sleepless nights. Yes, there are arguments, and that's healthy, right? But we've we can certainly say we've done our due diligence with this. This particular number, this 100% you guys are looking at, it is. I see why it may look scary, but believe me when I tell you, this is a very good number, and it will not hurt the existing community. It will actually benefit everyone here. I honestly, guys, I wish we had the flowchart ready and just put that out there. I think it would put a lot of people's minds at ease, but you guys are gonna have to bear with us. We're gonna give you guys that by our next AMA. Hopefully, it should be done, and maybe we'll do like a midweek next week something. Neville, what do you think? Chris, what do you guys think? Where we just talk about this like on a VC, and everyone's welcome to join us. But again, I don't a high level explanation, guys. What Neville explained it was bang on. You have a set supply, and it's like you have what's that word? Weights, right? One goes up, the other one comes down, right? It has to balance out. With a coin on its own blockchain, with its ability to be hosted on a centralized exchange, or many centralized exchanges, actually, not just one AMM that you're stuck with, right? But you go to centralized exchanges, many of them, where it gets a lot more exposure. The price is not determined by the supply of that coin. The price is determined by the user, right? So if and I say I want to sell this coin for this much money, I then put the sale through. It doesn't automatically give me what I sold it for. It doesn't automatically give me, for instance, USDT, right? Because there isn't that pool the liquidity pool is not like the same one on an AMM, such as PancakeSwap, right? Where it automatically is there and it just pays you out automatically. No, another user has to have a condition on their purchasing order, for instance, that fulfills your sale order. So if the price movement hits that target price, the order would fulfill, and that's how a centralized exchange works in a sense, right? But why I'm saying this is because the prices are set by the users and not some automated system. It's all in the community's hands. So if nobody's selling it for less than $1, guess what? Nobody's buying it for less than $1, right? That's just an example. And I don't want to sound like I'm drilling this down, but that's how it is, and we'll give you guys a flow on this.
Yeah, I think the flow will definitely help clarify some of the concerns. And again, I think that word inflation and the number 100% is a little scary. But I think what's going over a lot of people's head at the moment right now is that it's not that every single reward that's mined or from those, it's going directly into the circulating supply, right? So I think there might be a misconception where it automatically gets put into the circulating supply, which is not the case, right? So something to think about. But definitely that flow diagram will definitely help.
And keep in mind, right? What is that circulating supply? Is it one exchange? Is it two exchanges? Is it three exchanges? It's not, because anybody can then run a relay a node and update their existing exchange to accommodate for our coin at that point, right? And then you can have literally hundreds of different exchanges if they wanted to that accommodate our coin, right? Without having that liquidity that PancakeSwap requires, for instance, right? Sorry, guys. So I hope you guys understand the main differences, because I know that everybody's used to PancakeSwap, AMM. You sell it and you get the money for it instantly. That is not how centralized exchanges work, and we're moving away from the Binance Smart Chain over to our own blockchain. We are graduating, so to speak, from a token to a coin, right? And furthermore, when people come over to the Steam exchange, Rails network, and they want to purchase something that's on the Rails network blockchain, it's paired with SteamX. So then they have to go and acquire SteamX and buy it at whatever the price is. And then that's what also drives up the price of all of these projects that are on the blockchain, right? And why would you sell it for less than what you got it for? All right, guys, I'm gonna go ahead and hand it off to Neville to sum it all up. Go ahead, Neville. Thank you. Sorry about the background noise, guys.
I was going to say I got another question. Is that all right? A really quick one.
Yeah, go ahead.
So I understand about the marketplace, because I buy a lot of tokens on exchanges, so I get that. Question I was going to ask is that are the nodes going to be linked to the wallets? Because I know a lot of people want anonymity, so they don't want to, KYC and stuff like that. So will it be linked to a wallet, or is there another way that you decide how these wallets are allocated and nodes are allocated even? And the second thing is would there be a limit on the amount of nodes that are available in circulation, or is it just the whole community and then you stop, or you know what I mean?
I missed the first one, but Neville, if you want, I can take the second one.
Actually, they're both up your alley if you want to take both. So the first one was about KYCing to run a node, and the second one was about the wallets.
Is it linked to the wallet?
Yeah.
If you run a master node, then guys, I do apologize for the background noise. If you run a master node, you definitely have a much more rigorous KYCing process. That's definitely a requirement. A relay node or a master node, they all need a wallet associated with it. Okay, there's just no other way you're gonna get rewarded unless you associate a wallet with it, right? And if you don't associate a wallet with it, then you're just not getting your rewards. You're just wasting them.
Perfect. Second one was, would there be a limit on the amount of nodes that are in circulation?
So
obviously
currently the way we were thinking about this, and again, it's not set in stone. We wanted to kind of thank and make sure we take care of our community, and again, this is not set in stone, right? We're still processing the numbers on this particular way, but we were thinking of, we know that not everyone, or at least majority of people, are not probably looking to run a master node because it's a lot more work than they probably think it is, and you do need to be a little bit more in tune with coding and whatnot, Linux and whatnot. But and sorry guys, and so my apologies, guys. So, but a relay node is something that we were hoping that everybody could run and participate in, and so our initial thought on that was that we would give out the ability or the rights to run a relay node per person that we have that migrated with us. So like the OGs, the original people that were there supporting us from the beginning, right? Guys, I Neville, can you take over? I apologize.
Sure. I think a lot of the concern from the community, that at least based on what I'm reading, is that you've never mined, you have no intention of mining because maybe it's you think you don't have the right hardware for it. You've never done it, so you don't want to get into it. But we're going to make this process as easy as possible, right? So, all the way down to a program that we push out, where you just plug in the pool address and your wallet address and click go. Right, and you can mine from a basic laptop. If you want to, set up your first rig, we'll have instruction videos on how to do that. Right, so we're going to make this process as easy as possible for people who do want to get into mining. And keep in mind, mining is not just for the reward. Yes, of course, that is the money is the main purpose of mining on a blockchain. But people who have been here from day one, you're taking part in maintaining the security of a blockchain, the longevity you're contributing to, right? There's a lot of elements that go into mining on our blockchain that you don't necessarily see just based on the documents or the PDF or the slide deck that we showed you today, right? There's a lot more that goes into it from a personal standpoint that you're maybe not just considering at the moment. Yes, the inflation rate, the 100% that we mentioned, it does sound very, very aggressive, but we promise you that over time it balances out, right? And again, we didn't just, like someone mentioned in the chat, flip a coin and come up with a supply and come up with the inflation rate. No, it was definitely considered. A lot of thought went into it. A lot of scenarios went into it, to the degree where just missing one value had to delay our AMA till today.
Should I touch base on this? Like, should I just actually show what I'm looking at here, or
Sure.
No, you know what? Let them know.
I think it's better if we put together the flow as we discuss, and it will definitely make a lot more sense.
Okay, but I you know what? Let me just okay. Can you stop it? I've given you the toy that you want. Let me at least maybe elaborate slightly more on this. Okay, so the way we did it, right? It's very simple. We at the high level. I'm gonna give it to you guys at the high level without going into the nitty-gritty and the tiniest of numbers here. You take the current supply, right? So what we have, the current supply, and then you take the current price, right? And then calculate what the suggested price is going to be. Suggested supply is going to be based on how much you're dividing it by. So if you take the current supply and you divide it by, for instance, 550, right? Then you have to multiply the coin price by 550. Then you get what the suggested supply is going to be worth, how much in circulation, right, at time of migration, and what it's going to be the price of, right? So again, you divide one aspect of things and you multiply the other aspect of things. It's all proportionate. Exactly what we've been telling you. It's proportionate, so you don't lose a dime. So if you had $10 worth of coin before migration, day of migration you have $10 still, right? The only thing that's different is the amount of coin, but it's still worth the $10. Now, the 100% comes next, right? So you know that you want to take that number and you're going to 100% increase it over the course of a year. So we have 365 days in a year. It's very simple. What's the best case scenario and the worst case scenario? So we know best case scenario, our block time is 3 seconds. Worst case scenario, our block time is 5 seconds, which is really good. And considering how much we can process in every block, some of you may have already noticed that we are quicker than several well-known big blockchains out there, right? Because you guys did the math, which is good, very good. Very proud of you guys for that. Now, it's a simple math thing. You know that if you want to do the high and the low, 3 seconds and 5 seconds, you can calculate it twice, or you can just hit the middle and go for the 4, and then you say, okay, well, we did it as a worst case scenario. What's the worst case scenario? Because again, that's personally how I tend to overthink things. We did a worst case scenario. In 1 minute, you get 12 blocks. Okay, that's 5 seconds times 12. You get 60 seconds, right? Now, in 1 hour, 720. In 1 day, 17,280. And in 1 year, well, that's a huge number, right? But you get the point, right? So out of that, that's how you calculate what is the price of how much gets generated every year based on the price that moment that you took the initial price, that you compared the initial price. This is why we say we're going to have to recalculate this, right? Now you look at it and you say, okay, you break it down to 50-50. Now you know for a fact that it's not going equally to every single miner. So you average it out and you look at it and you say, okay, we know that the average person's computer has at least this such and such card, right? Even if you have just one card. And we're looking at it only from the mining perspective, right? Now, what does it cost to run that card? What does it cost to acquire that card? Okay. Is mining our coin at this amount of reward going to be worth it for that particular card? Again, we're doing the average here, right? On the low end. So if it is, then you have to see if it's just breaking even, then you want to find that spot where it's even, and that's your lowest number, right? Because that's where it becomes not worth it. And then from there, you have to think, okay, what's the long-term goal here? You want to calculate approximately 8 to 10 years, right? And then you can also, because the way we're built, we can always mitigate it. We can always change it, right? So you want to calculate for approximately 8 to 10 years of halving, right? So we said every 2 years we're going to have. Okay, what is that number going to be at the end? And then that number is what is your new bottom. You have to bring it up. And then on top of that, you go the reverse process and you add, because whatever number you put now, your end goal in 10 years has to be that break-even point, right? Where it's not worth it to mine anymore, essentially, right? But between now and 10 years, obviously, we have things in place to mitigate for it, as you guys know, because we've gone over this, or we mentioned this, and it's a pretty big positive here, because nothing that you commonly know of is done in such a way where it would accommodate. They're more like, okay, it is what it is, and there's nothing we can do about it. That's why you did see a lot of projects and a lot of blockchains that are considered to be like a one-hit wonder. They're good for a month and done. We don't want to be that case. We want to be slow and steady wins the race. So I think I gave you guys a little bit more an in-depth look into it and a little bit of how we calculated it. And again, that's the minimum, and then you want to see and want to make sure that it's actually worth it to people. So you go and you compare it to market values of other cryptos out there, and you don't want to be the top one, you don't want to be the bottom one, you want to be somewhere in the middle, right? Because if you're the top one and you're getting too much volume, it's going to overload you. We've tested for it, so we know we're good for it. But again, we don't want to take the unnecessary risk, right? We want to naturally grow. Why? Because we want to naturally grow the miners. We want to naturally grow the master nodes. We want to naturally grow the relay nodes, because it helps the system progress, right? And by overpowering one thing, you're looking at causing issues, right? With the pools in particular, we have ways of mitigating that as well, separate from the halvening process. We've talked about this in our previous AMAs. It's going to be part of the requirements for the pool operators, which they would have their own terms and conditions, that they have to abide by certain basic rules, right? And this is all for the greater good of the blockchain. So if we start seeing that a certain pool kind of starts hogging all the miners, we would then limit that pool and kind of put a pause on it where no new miners can join that pool, and they would have to disperse, right? Good for the blockchain, good for the whole ecosystem. For the greater good, maybe not particularly that person, but for the greater good, it's a good thing, right? So, and there's much more information, guys. We could literally spend hours and hours and hours on this, but I hope that us giving you this little bit of extra insight now that we weren't planning on puts your mind at ease and does show you to what length we've gone to be as cautious as we can and give you guys the best number as of time of taking that price point, right? And again, in the future, when we take another price point, those numbers will change, and we'll again go through it and make sure everybody knows how we got that number. But this has been a great example, I believe, for everyone, and I think it's a big eye opener for a lot of people that perhaps don't exactly understand the main difference between a centralized exchange and an AMM. You guys know how to trade on it for sure, but when one asset moves over to the other style, I think there's still some confusion there that we'll have to go through. Anyways, guys, I'm not going to keep going on and on about this. I think this was a great AMA for you guys. I think you guys had some great questions in the chat. I hope we answered them all. Okay, Mile High. Okay, sorry guys. Mile High has a question for quite a while now. I'm just gonna go ahead and take that question before I pass it off to Kristen, Neville, and Anki to wrap it up. Mile High, go ahead.
Hi, Gary. Thank you. I just a quick question. Basically, so my question is that if some people move in and they have the means and the funds to mine and run nodes, will there be mechanisms in the future to kind of maybe prevent this? Because one of my concern is that other people from other countries, I'm not going to name countries, but they might, because I'm pretty sure in the future that the blockchain will be very valuable and the coins are going to be valuable. So if they bring in their funding, their capacity to mine this blockchain, they can potentially be whales on our blockchain. Has that been considered?
Yeah, we have mitigations in place. We are ASIC resistant. We have not put that information out there, but I mean, you somewhat made me just say it. We are ASIC resistant.
I think on that note, Gary, it's a good note to bring us home. Guys, of course, we do understand there will be multiple questions or maybe other elements that you guys will continue to have concerns over. Just drop them in the chat. We will get back to you. And also from our part, I do believe internally we will work on a flow diagram that will better communicate some of the concerns that you guys have. But I think for today, we should be in a position to wrap up the AMA.